Hi, it's Kim here from KMA Accountancy. Just wanted to bring this quick video to you to talk about the loan schemes that are available as a result of the coronavirus. Now, you'll have heard about CBILS, the Coronavirus Business Interruption Loan Scheme, and all the bad press that has happened there. You know, ultimately, there's a lot of banks and lenders that are part of the scheme. Lots of people have applied, but it's taking so long for the funds to get out there. And that's because there's an awful lot of hoops, if you like, to jump through in terms of cash flow forecasting, bank statements, accounts, management accounts, and lots of other information. And it takes quite a long time for your bank to process this information and then obviously to get the funds out there. So this week, the Chancellor and the government has announced on Monday, the 27th, have announced something called the Bounce Back Loan. Now, this is aimed at much smaller businesses. It's aimed at the small business community who can lend between £2,000 and £50,000 or 25% of turnover. The idea behind it is that it will happen a lot quicker. So there will be an online process, although in truth, we don't know exactly what that's going to look like because the scheme, whilst it was launched last Monday, it doesn't actually open its doors, as it were, for applications until Monday, the 4th of May. So we're not quite sure what it's going to look like. So basically, there is no interest to pay and no capital for 12 months. The government will, guarantee 100% of it in the first year. There is up to 6 years in terms of a loan period. And there are essentially three criteria that you have to meet. So one of those is that you are, based in the UK. And the second criteria is that you have negatively been impacted by coronavirus, and you'll be expected to show why. And the third one is that you were not an undertaking in difficulty on the 31st of December 2019. Now, effectively what that means is you weren't in distress and effectively insolvent at that point. So this whole point of this loan scheme is for healthy businesses that, would not have been affected trading wise if it wasn't for the coronavirus. So the government wants to protect businesses and help them to get through this period, however long it's going to take. So if you have already, put in for a CBILS loan or have been given a CBILS loan, then apparently you can, transfer to the bounce back scheme up to the 4th of November 2020. So we don't know how long this loan scheme is going to be around for, but obviously you would assume that it's certainly going to be around till November if you can transfer across at that point, up to that point. So if you were thinking about applying for a CBILS, then obviously you've got another option now. It is aimed at, the smaller end of the lending, but of course it is 100%. So potentially it should be quicker to get this loan. Now, again, we don't know the full details of exactly what information will be required, but clearly they are going to look at accounts, your balance sheet position as at the 31st of December 19. So that may be your annual accounts, if your annual accounts, run to that period, or management accounts if they don't. We don't believe they're going to be asking for a cash flow, but there is a high possibility that they may be wanting to look at bank statements. They want to make sure that you ultimately can afford to pay this back afterwards. Again, we don't know what interest rates are. In fact, as late in the day as today, apparently the government were talking with all of the banks to look at what rates they were going to offer, and obviously they're trying to negotiate low rates. Now we've been seeing some rates for the C-bills, you know, potentially as low as 2.5–3%, up to sort of 5.5% with traditional banks, and obviously with the fintech sector, you know, higher, up to sort of 10-ish percentage. So we're hoping clearly that you know, the bounce back loan is going to be perhaps, hopefully, a similar level to the banks. Now, again, you will be able to apply online. Barclays have announced that today. So you will be able to apply online for these bounce back loans. We're not, again, sure exactly when that process will open. Obviously, we've been told they'll be available from Monday, and there will be lots and lots of providers that you can, you know, go to. So you might want to apply online to your own bank initially, or potentially look at, you know, another lender. Apparently, the best C-bills provider has been NatWest and RBS, but who knows, you know, not massive numbers of those loans have actually been going through. So what, you know, I don't for 1 minute, you know, I'm not advising you to rush out and take a loan. Don't get me wrong, you know, you must always seek advice from your advisors. But clearly, if it's something that you're thinking about, then it's definitely, you know, worth exploring. It should happen a lot quicker. We believe that once the application's been approved, it could be, the funds could be available within 24 hours. So clearly that's, you know, good news. You know, it's a lot faster if you are running out of cash and you need support. And as we say, there's no capital and no interest to pay for the first 12 months. So again, you know, potentially slightly different to C-bills, because whilst there was no interest to pay for 12 months, it depended on the lender with regard to the capital. So hopefully that's helpful to you on the bounce back loan. As I say, you know, either speak to your bank, you know, Google it, probably the best way right now. Speak to your advisor, you know, or kind of watch this space, and hopefully all will become clear on Monday. So good luck for now. Speak soon.